That's dope.
What is up, everybody? This is Scott Melker. It is Monday, March 1st at 2:14 p.m. Eastern Standard Time. That was completely our fault. Accidentally, we sent David a Zoom link when it was not supposed to be a Zoom link. So all apologies that we are delayed here, but it's given you guys a great opportunity to pile in and start asking some questions. So I'm going to go ahead and bring David Mercer, the CEO of LMAX Group, into the stream. How are you today, David?
Well, good, Scott. Good to be here.
So listen, can you first just give a very quick and brief introduction into exactly what you guys do? It's absolutely mind blowing when I saw how much volume you guys are pumping through the exchanges.
Thank you. Yeah. So look, LMAX Group, traditionally we've been a foreign exchange operator. So we operate 5 exchanges globally, 3 in London, 1 in New York, 1 in Tokyo. Typically in spot FX, we trade about 25 billion a day of FX. Although we did mid-30s on Friday for month end, I'm sure, as you're aware. And then 3 years ago, we launched LMAX Digital, our 5th exchange. We've just had a pretty good start to the year. So last year, 120 billion in the whole of last year, and we've done 100 billion year to date, with our best day being 4.5 billion. Look, LMAX Digital is specifically for the institutional market. So if you look at my wider group, we've got about 35 banks trading with us, or most of the proprietary trading firms, hedge funds that you'd expect. And actually 40% of my LMAX Digital customers trade another asset class with me. So that's how we fit into the landscape, squarely at the institutional space, not targeting the retail market, but hopefully servicing that through a disintermediation.
I'm curious, what are the major notable differences between servicing institutional clients and servicing retail clients? Obviously, I would imagine you have to be able to fill much larger orders, and they have certain demands that a retail exchange would not require.
Yeah, I mean, look, I think at the high level, first of all, I'd like to congratulate the retail exchanges, right? So some of them are going to get a lot of column inches right now for listings, etc. They've done a brilliant job, and they've done a brilliant job in onboarding and educating that side of the market. In the institutional space, look, it's all about liquidity. They want to trade with like-minded participants 24 hours a day, 7 days a week, and basically exchange risk with each other. What's key is, for them, really latency and throughput. So I've got to have depth of book. I can't have downtime, right? And they're expecting matches like that. So specifically, we operate central limit order books, and we operate the purest exchange of all in LMAX Digital. So I haven't got some of the challenges that you'd see in the retail space, where you've maybe got 5 million concurrent users asking a lot of different questions. In the institutional space, it's basically 400 customers, and they all want to do buy or sell at any given time and get the order back quickly and in size. So it's just a different tech challenge more than anything. But I think overall it bolsters the ecosystem that we're all trying to build.
Yeah, anyone who's in crypto and has traded on any of the retail exchanges is very familiar with the downtimes. And every time there's any volatility, all of a sudden you're locked out and orders won't trigger and things like that. So I would imagine that that's a very significant challenge for those exchanges, because, as you said, they have so many participants at a time. But that's something you probably can't allow to happen literally ever.
Sometimes we should cut them a break, right? So I'd cut the retail guys a bit of a break. It's a bit like running Amazon, or maybe just buying tickets for a show on Ticketmaster. There's so many concurrent users, and they're asking a whole range of different questions now. What's my account balance? Show me the chart for Bitcoin. Show me the chart for Ether. Oh, let me print off my statements. Let's add some technical analysis to the charts. I mean, that's a really tough technical challenge. If you think about running an exchange, no different to the big futures exchanges in Chicago or stock exchanges in London and New York. It's literally asking a much narrower set of questions on a much narrower set of products. And then it's all about scalability, throughput, and ultimately, if you're running an institutional exchange, the depth of liquidity. So different challenges. We spend probably a third of our money, a third of our budget every year, a third of our resource in just improving performance capacity. So, for example, if you want to cancel and replace your order and you're an institution, you expect to do that in 80 microseconds. That's what we do at LMAX Digital. If there's a busy time, in foreign exchange markets, it's used to be certainly non-farm payroll. So at that time, I need to be able to process 1 million orders a second. And I can't can't enter bank A or fund B and say, hey guys, really sorry, it's been a busy 1 minute. So just the demands of that customer are very different. And therefore the way you build out your tech is also different.
Right, but volume is so much higher in Forex across markets, so you probably have plenty of practice. Probably made it easier probably for you than a lot of people who just started or opened exchanges or started these products in the crypto space. I'm going to jump right into some questions we have from the audience because we have quite a few. Philippe would like to know, what is the institutional feeling toward Ethereum?
Feeling is hard to say. And there, I think you need to look more into the DeFi world. The truth of the matter is, at the moment, Bitcoin is the chosen asset in terms of diversifying your portfolio, in terms of getting some access to the crypto market. I think everyone is very aware that Ethereum, certainly ERC20, is the future, and in terms of usage and utility. So that's the future for how we're going to build out the future of finance. But today, in terms of all the news you're hearing about the big names investing, of course, Mr. Musk investing, it's a case of what's the easiest way for me to get exposure to this asset class? And that's Bitcoin. You know yourself, that's ultimately what everyone's trading. But I think use case wise, people are keeping an eye on Ethereum. And maybe if they choose to be in crypto, it might be 80-20. Right. Certainly in terms of my volume, 70% of all my volume is Bitcoin.
There you
go.
But
Ethereum is a very strong second position at 20%.
Almost everybody describes it as 80-20. It's so funny. Whenever I ask them about their portfolio, that seems to be the expected balance. And clearly, as you touched on, I mean, Bitcoin is viewed now as digital gold. It's the hedge against inflation. You're buying it to hedge against, the dollar. That's why you hear Michael Saylor and the Elon Musks, obviously. And Ethereum is, as you said, it's utility. It's something totally different. It's maybe, DeFi or banking. And so it's interesting, to see in the future if any of that trickles down, I guess, from Bitcoin and people start touching Ethereum as Bitcoin maybe becomes out of reach or a bit more scarce.
It's just a bit, one thing I'd say there is at the moment, from an institutional standpoint, it's a bit slow, right? Just in terms of, getting your confirmations, and it's quite expensive, right? It's quite expensive to settle. So that's the guys that are in the know are also going up. Ultimately, if we're going to speculate on the day, if we're going to make markets, better to do it in Bitcoin than Ethereum. So, but look,
makes perfect sense.
I expect that to change in the months and years ahead.
The next question, what are the challenges to adding new pairs? U.S. exchanges seem to be exponentially slower in adding assets while giving very little information on how new assets are evaluated. Your thoughts?
It's difficult, right? For me, then I guess I can be hugely criticized because, we list 5 of the most liquid pairs, albeit against dollars, against euros, against yen. So, it's Bitcoin, Ethereum, Bitcoin Cash, Litecoin, XRP. To run an institutional exchange, it's, do I have liquidity 24/7? Because you're just not going to thank me if I let you get into it and then you can't get out of it. I just run a
right.
If there's no depth there, or dries up, or liquidity providers go home on a Friday, don't come back till a Monday, you're just not going to thank me. So I think we all need to be aware of that. I go back to a former life where, you were listing equities as a broker. Of course, someone always picks up some equity, outside the top 500. And yeah, you can get them a price, but people have to understand that there may not always be the liquidity when you really need it. So I think that's the challenge. Again, I go back to the retail ecosystem, and I take my hat off to many of them in that I think they list a good array of crypto assets today. And frankly, the institutional segment isn't ready for that yet.
Right.
I need to have, in FX parlance, I need to have $50 aside. every millisecond of every day. In Bitcoin or Ethereum, I've got to have $10 aside. If I haven't got $10 aside, I can't list it because it's of no interest to my institution.
I'm curious along that end, what kind of market cap does a coin have to get to be on the radar for an institutional exchange? How do you know when it is big enough?
It's a valid question. For me, I think I'd probably work backwards. $10 aside up, $10 aside up. I guess then you're probably looking at a market cap of certainly $500 million might be what you're looking, billion maybe. I don't know. I'd have to think about it more, but it's about, have I got liquidity that will enable people to get in and out in 5 to 10 aside? And most importantly, not just once, right? So
yeah,
that's it. These guys, they might be HFTs, they might be, buying and selling in very short time frames. So I've got to have 5 or 10 up all the time. There's no good if you sweep it, Scott. You sweep me for 10 and I don't refill for 5 seconds. I look terrible. It's a very bad experience for the institutional participant, and it wouldn't exist. So I think I'd start there. Can I consistently 24/7 have 5 to $10 aside, and is that sustainable?
Yeah, and I have a feeling that a lot of the questions are going to be very retail exchange based because that's what people here are familiar with, okay. Obviously. And I can see the next one. What are the government threats that cause exchanges to geo-block users? Do you see this becoming less of an issue as institutional money flows into crypto? Of course, anyone who's in America knows how difficult it is to do anything fun.
Yeah, look, maybe I'll be a bit of a killjoy here. I think regulation is going to get better. It's going to become more standardized globally. But that may not be what private investors want to hear. Right? I personally am a free market libertarian, so it is very much buyer beware. If customers want to trade it, I'd let them trade it within reason. But we also need to protect the uninformed. So, for example, in the United Kingdom, we recently, the FCA banned leverage on crypto.
Right.
I think that's probably the right thing to do at the moment with an asset class that's so volatile. Remember, people have short memories. Bitcoin traded 4,000 or 3.8 last March.
I remember it.
Yeah, you and me both, right? It's a scary day. But it's okay. That day, oil traded below zero. We thought Bitcoin was going to zero, but it didn't. So, look, I think it's becoming more standard. I also think this is a good thing. It's becoming legitimized through that regulation. As soon as they build a framework, it means they're allowing it. They're not criminalizing it. But, we all might have to get used to filling in the standard KYC AML docs that you would do if you were opening up a stockbroker. It's just the way it is. I think we should protect private investors, but allow them to engage. And in the UK, I talk a lot from a UK standpoint. That's where I'm regulated by the FCA at the moment. And we do things like, you have to perform a suitability test. Have you traded this before? Do you understand leverage? Tell me your experience. So I think that's a good thing, but globally, it's being accepted. But it certainly won't be the Wild West. I do think it's irresponsible to allow private investors to leverage such a volatile asset class 100 times, right? You're seeing 400 times.
Yeah. It seems like there's a happy medium. Like, for example, I know in the United States, cracking can allow 5%, and that's about the extent of what Americans, maybe that's more reasonable than people touching 100x leverage, which gets you liquidated before you can even hit the buy button.
Yeah. And actually, when I look at regulators globally, I'm not sensing a lot of wanting to close this thing down. And that's what the fear is. The fear is they want to close it down. I don't think they want to close it down, but they'll do want to create a framework. Remember, it's still very nascent. It's still very small in terms of all the asset classes in the world. To put it in perspective, foreign exchange trades $7 trillion every day. The cap of Bitcoin's just around $1 trillion, right? So that just gives you an idea. So I think globally, we're creating a framework. It'll make it work better, but people sometimes confuse regulation with what is AML compliance. It's just been in place for over a decade now. We have to follow FATF guidelines. And it's basically so that we can, exclude the criminals, if you like, from our financial services environment. So I think we should get used to that. And then hopefully the framework will allow us to breathe, allow us to try things, and allow us to trade.
That makes perfect sense. The next question also is going to be a little more retail geared, but at the current pace of adoption, how long will central exchanges expect to be a sustainable business model versus decentralized exchanges? Which obviously, I mean, in the DeFi space, everybody's trading on DEXs now, right? They're swapping. Yeah. They're not going to centralized exchanges.
Yeah, I think it's great. I mean, I guess we straddle the status quo of established exchange space and the new world. I'm personally a big believer of DeFi. I can't say LMAX Group is in DeFi yet, but I think at some stage we've got a part to play. It might be on-ramps into the DeFi world. It might be as part of an oracle, because ultimately you need accurate timestamp valuations of the assets you're swapping and trading. So I think the future can be decentralized, but remember, sorry, you can see by the gray hair, I'm an institutional guy, and it's going to take a while for those institutions to adopt and to adapt into that DeFi space. So big fan of it. I think it's got a part to play, and we'd like to help enable DeFi. But I think, for the big chunks of money you see traded at the moment, it's a long way away for institutions.
Yeah, that makes sense. I think it's still very much in its infancy, and anyone who was around the DeFi ecosystem last summer saw quite just how Wild West it still could be. So hopefully it will mature. The next question is a very simple one: the security on leaving crypto in exchanges. I think people are always curious about not your keys, not your coins.
Yeah, I think you need to be careful, right? So, but again, that's getting better. I mean, it's funny, that was one of the challenges we had at LMAX Digital. Like it or not, I had segregated bank accounts with, you name any one of the big banks. So my customers deposited their funds into segregated accounts, nice and easy. I don't have to be the bank. I never wanted to be the bank. I just wanted to build low latency technology and match buyers and sellers. Then you move into this crypto space and you have to suddenly build out a custodian. So people are concerned, how do I keep my assets safe and secure? It's difficult, and there's a whole range of it there. I think you have to do your research. You can't necessarily just trust every single exchange or platform out there with your keys. I happen to think, of course, you could trust LMAX Digital, so we sit on very large values of asset at any one time. But I think you have to do your research. And the good news about crypto, unlike fiat, of course, is if you don't like my security or someone else's security, take it yourself, right? Guard your private keys yourself. It's actually quite simple to do, right?
It's intimidating at first, but once you realize how easy it is, it really is quite simple. But I would imagine, and we've heard stories that for institutions, certainly one of the reasons that they were not in crypto for so many years was because, the custody headache. Trying to figure out where they could custody. They don't want to, how to split the private keys, if that's a thing, if there's insured custodians, things like that. But it seems like those issues are largely being sorted now.
Yeah, they're being sorted in one way, but let's be clear. I mean, ultimately, when you do the technical research, it's non-trivial to get started, but mostly the large custodians, you've seen the announcement of some of the banks, they arrive at similar solutions. So it's quite simple to keep it secure and lock it up. What's harder to do is to allow access for highly active traders, right? And to ease that settlement and payment flow. That's more difficult. And then the insurance is an interesting point, right? It's very simple. Don't assume you're covered by insurance.
Ever.
You can go and look at the documents, but the size of, they're all insured actually in the specie market. So how you insure gold, for example, it's the same market. That's very small, right? So it's only a fraction of the total coin in custody today is covered by that insurance. So don't rely on it. And I think when you see the institutions coming in, actually the reliance is on the balance sheet of the institution who's acting as the custodian.
That makes sense. Next question. I know that the answer probably is Bitcoin right now, but what the most popular trade for institutions right now, and what do you think it will be over the next year? And I think that he might be sort of hinting at the grayscale arbitrage trade, but perhaps more generally we can talk about this.
Look, I match buyers and sellers. I mean, it's certainly Bitcoin. On the futures side, still people are looking into the front month. But yeah, look, there's some decent calendar spreads out there. And in this nascent market, and Scott, you can probably tell your viewers better than I can, there is certainly price arbitrage around the place between both spot markets and future markets. But with that price arbitrage comes credit risk, right? So you've got to it's quite expensive, capitally expensive, to basically fund both exchanges or the spot and the future and keep them funded to access that narrow price arbitrage. But I think certainly when you look at the institutional space, two types of trader right now, it's basically buy and hold, not dissimilar to retail. And they're buying and holding, as I said previously, 80-20 Bitcoin over Ether. And they're coming in once, and they're holding it for a while, and then they're rebalancing their portfolio depending on the price of the asset. And then there's your other type, which is day traders, speculators, and looking for that price differential, or dare I say it, arbitrage between exchanges on any given day. So that's how I'd characterize the market today. Yeah,
a lot of them are probably market making with those arbitrage opportunities, which would make a lot of sense with that size, obviously. From when an institution decides to buy, how much average time is there between the decision and completing he says exaction or transaction, I'm assuming?
Well, depends what you mean, right? Assuming they're open, assuming they're funded, as I said to you, it's
instantaneous.
It's a microsecond. Now,
it's incredible.
The truth of the matter is, and what hopefully somebody will ask is, banks aren't actively trading this today. So, but they're all going to. I mean, I say I've got 34 banks connected to LMAX exchanges. None of it would be wrong of me to say that any of them are actively trading it today. But 3 years ago, none of them had any interest in talking to us. Now I've got 10 actively engaged, and I expect a handful to be trading by year end. So in terms of that decision tree, it could be 6 to 9 months. But what's the good news for all private investors out there is there was an announcement today, just before it came in, about a bank opening up a trading desk again, is they're coming. And the first reason they're coming is to facilitate their customers. So that's probably the longer term, I'd say 6 to 9 months in terms of onboarding. That's the truth, because they're going to go through all their committees, credit committees, risk committees, as well as external, perhaps Fed approval. So that's what you can expect. But once they're in, decision time is instantaneous.
Yeah, well, that is encouraging, as you said, that even if the banks are resistant to it, they're probably getting so much pressure from their customers that they have to be exploring it at this point.
Yeah, I mean, I think that's great for everyone, for all of us.
Right.
Because you've been in it for a long time. I'm in it naturally through my job and through my, shareholding in LMAX Group. But it has been all about, you have to be an evangelist. No one's about Bitcoin, about Ethereum. The market will grow just with participants who don't have to be evangelists. No one's ever asked me, hey, David, how much do you love the euro? How much do you love the dollar? How much do you love gold?
So true.
For me, it's just an 81st currency pair. I offer, hopefully, a tight market, a deep market, and I match buyers and sellers. But with that, just becomes greater adoption. I talk a lot about the ABC of crypto: adoption, banking, and credit. Greater adoption by a wider segment of the trading community will benefit all of us. We'll have better liquidity. We'll have better market access. So, I think they're coming, and the bank's coming, whether they like it or not. They don't have to love the product, but they need to
offer it. Yeah, compete or die. I mean, their customers will go somewhere that has it if they don't. This is actually a really great question, one I never thought of. But how much leverage can institutional investors get access to?
Yeah, it's on the futures product. Typically, you'd be starting at 3 to 1. As someone becomes more active, depending on the balance sheet, Intraday, you can get to 10 to 1. And actually, funny enough, mostly it's their decision. You know, most of them aren't leveraging this that highly because you've seen the moves, you've seen the gaps in the market. So I'd say they're comfortable with 5 to 1, maybe up to 10 to 1 intraday, but they're not looking to take it to the extremes in illiquid periods. So overnight, going into the Asian time zone where strange things can happen in every market, they're not leveraging, you know, to that extent then. And certainly even weekends, right? You wouldn't see the same institutional depth of weekends that you might perhaps experience in the retail market.
That makes total sense. This is another great question because you mentioned at the beginning 120 billion in institutional investing last year, 100 billion in institutional investing year to date. Was this specifically for crypto? I'm assuming yes. And our
that's for crypto, yeah.
Yeah, and our other institutional support exchanges experiencing the same growth? I can say anecdotally that I've spoken with a few retail exchange CEOs, and they've all seen this across the board. That January was better than 2020.
Yeah, that's true. Look, but let's not get carried away. So, voice of reason again, I hope. Funny enough, I count coins traded because it's all very well when an asset class doubles. So, if you imagine me going around and beating up my sales guys, an asset class doubles in price, and they say, "Hey, we did double the volume." I said, "Well, did we really? The price just doubled, right?" So, I go back to the coins traded. So, put it in perspective. My average coin traded in 2020 was about 650,000 a month. The average coin traded first 2 months of the year is 1.2 million. So that's a double of coin traded. Of course, in terms of volume, it's gone up 400% because the average price of the asset last year was, I guess, 13,000. What's the average been this year? 40 something. So
right.
What's underlying is more important, is that. And what that means is greater adoption. I mean, I'd love it if everyone was as supportive as LMAX Digital as they are as some of the retail exchanges, but I'm just a barometer for the institutional market. So I'm not accessing direct retail. So when you see my volumes go up like that in coin terms as well as dollar terms, it means the institutions are coming. As I said previously, that will benefit everyone. So yeah, Great couple of months, great start to the year. Let's not get carried away. For me, I've got to deliver the same service, whether the price trades at 4,000 last March or whether it trades at 58,000 as it did a week or two ago.
Yeah, that makes total sense, but it really is the narrative this year. So it's nice to see that you're having it supported in volume. Is it institutional big money here? Because we talked about it in 2017 as this sort of like pie in the sky idea, and people conjectured about it all the time. But now that you see it in 2020 and 2021, you know that it was not the case, certainly back then. Yeah,
I mean, look, we have to be frank as well. I mean, the reason we set up LMAX Digital, by the way, was because institutions came to me at the tail end of 2017 and said, "Hey, David, can you put together some industrial grade exchange for crypto? We want to trade with like-minded participants." So we said, sure, and we launched it. Of course, then we launched it only took us 6 months, but we launched right into the crypto winter.
Of course.
But it was always about the long-term opportunity rather than short-term opportunism. If you think about it, hopefully we'll see the fruits of our labor now. But, you know, the first year, I guess, 2019, we would have traded 50 billion in total for the year. 2020 traded 120 billion. And as I say, 2021, over 100 billion already. So that's just a sign of institutional adoption, price adjusted. I mean, I'd expect us to trade this year, in excess of $500 billion, which obviously is a big step up from 2019 when you were only doing 50 billion.
Yeah, it's a big number. I'm curious, actually, my own question, knowing that there is this depth of liquidity and that you can fill orders this large at this size, this quickly, why are we seeing institutions go on, Michael Saylor going on Coinbase and filling 16,000 micro transactions as opposed to, doing this over the counter with an institutional grade exchange? I'm curious why they would do that, because you can fill hundreds of millions of dollars in orders without.
Yeah, He did well. A, he didn't call me Michael. You know where I am.
I'll tell him.
B, look, again, it's if honestly, Scott, if you just press click, mining 100 million right now, you'd create a real dislocation in the market. So for what it's worth, I think he did it in a smart way, just bought it over time. Also, he reduced his cost of trading, paid very tight, if you like, retail spreads. But that's going to change. I mean, when you deal with real money, when you deal with the asset managers or the pension funds, there's two types of algorithm, fast ones and slow ones. And sometimes they just come on, whether they're rebalancing their books for a month end, a quarter end, or it's a specific portfolio manager says, buy me 100 million. I think that's where the institutional exchanges like us come in. But, the depth of the market means that 100 million, or if Elon Musk came in and, bought $500 million, you're going to see the market gap up, maybe 5 to 10%. So I think Michael maybe did it in a smart way, given the ecosystem at the time. You haven't got, unlike the more mature asset classes, you haven't got a lot of risk warehousing. It's not like Bank A in Manhattan or Bank B in the city of London is warehousing, $1 billion of risk, or even $100 million of risk. You can just price out of inventory. It really is going, straight to the liquidity providers and all the way around the market again. So I think buying the amount that Michael did, probably did it the right way. I'd rather, obviously, he did it in slightly bigger shapes on LMAX Digital, but it's going to be the way it evolves in algo execution over time.
Right, and maybe there's a happy medium as well. You don't have to do 16,000, but you can do 1,600 or do 200 or 300, right? And that you would have been able to easily fill that probably without moving the market too much. That lends to a really cool question here. You touched on it earlier, but are institutions trading or are they holding?
Two types. I'd say and you probably know who they are. The highly tech-enabled market makers, liquidity providers in Chicago, New York, Amsterdam. They're really making markets and trading. Right? That really is what they're doing. There's a few other that are just effectively acting as agency for customers. So they're buying and holding. I'm not seeing really big names buying and holding just yet. Obviously, we saw the press inches about a few of them, but mostly I'd say they're trading at the moment. But that trading, again, I go back to it. Obviously, I love trading and I love exchanges. That activity of trading from market makers and liquidity providers creates a better exchange experience for all. That should filter through, by the way, to all segments of the market. I mean, if you look at, sorry to bang on about FX, but if you look at my FX exchanges, I've got 200 retail brokers as customers of those exchanges. So they take an institutional price and they pipe it up to the end user. So the more activity we have at a good price point on an institutional exchange, the better fill, the better trading experience you get in retail investor land.
Yeah, that makes perfect sense. Actually, I saw a great question here that was somewhat a follow-up. It's corollary, the same idea. But do you know if the institutions that are buying crypto are believers or if they're just in it for the money? And have you seen that? And I'm curious, have you seen, even if it's only slightly, have you seen an evolution maybe of, from the clearly in it from the money to slightly more people who actually view it as a hedge, the Michael Saylor types?
Just an even split. I mean, I still meet some non-believers. I mean, I won't name them, but I met one bank and they just said to me, this was only 2 months ago. We don't think it's sustainable and we're not seeing that much interest from our customers. Then I have some individuals at banks who've believed in it for 3 years. It's just working through that process internally and externally with their regulators, for example. I think the bulk of them, though, I genuinely don't think they're doing it right now just to make money, because they make enough money in their core products right now. And this will still be small. It really is servicing their customer. Now, that might be a boring answer, but the reality is they need to. Because you see the names, you see the much vaunted listing that's going to happen in the US in the coming weeks. And they've got 40 million customers. Those customers typically belong to someone else. So I think they have to facilitate client trading. So Sorry, there's two, three, maybe four groups in there, but certainly I see the tide moving. It used to be individuals within banks and institutions who had interest in it, and now I think it's departments and actually at board level. They're saying, okay, it's here to stay. If you are a crypto evangelist, if you're in the space, it's like, I think we've proven our point. And believe it or not, I think last March was the proving point. When I tell everyone this.
Yeah, when everyone didn't get liquidated.
Huh?
I said when everybody didn't get liquidated.
That's it.
when you survived, if you can survive a drop that big.
Bingo. Robust resilience. I mean, literally, the disbelievers at the time, or non-believers, said, this thing's going to zero. The charts of oil and Bitcoin look like they're going to zero. I know I've said it before, but the reality was, at the end of the day, they were paying you to buy oil.
Sure.
Bitcoin found this floor, right? Roughly about the cost it cost to mine it. And since then, in my opinion, people suddenly went, hold on a minute. This is here to stay. This is robust. This is resilient, right? It's a real asset class, and I can get involved in it. I personally think more than all the other press inches, more than all the other big names talking about it, I think that was the time and that was the month when institutions went, okay, now I'm going to have a desk to trade crypto.
Yeah, I agree. And it was also obviously impressive to see that the exchanges and the platforms were able to survive it themselves, I think, which was quite impressive. It's funny, I just have to laugh because you obviously touched on superficially the Coinbase IPO. They're an incredible company. They're doing all these amazing things. But going back to what we were talking about before, if there's 2% volatility, they go completely offline and nobody can trade on it. So it's amazing that they've done so well, and that retail demands are so minimal on the platforms that we trade on. I think we've just become so familiar, so accustomed to that level of service that it doesn't even make people blink anymore. But that would never fly in other markets, in my opinion.
No, it won't. But we're learning patience. I think certainly the pandemic has taught us all patience. And you've been there. We've all been there at the outset of look at the channel we're on now. Remember when people didn't have high-speed broadband or Wi-Fi? Remember when you couldn't find what you wanted on Amazon? Remember how hard it was to find something when you went into a search engine? So I think we're learning patience. And as I say, I take my hat off to most of them. It will improve over time. The growth has been so rapid that they're going to have teething problems. But look, the great thing about capital markets, why I'm still in it after all these years, why I like it is there's competition just round the corner, just on your shoulder. So that keeps you honest, right? It keeps you pushing ahead. And again, back to being a private investor, I do it myself, or a retail trader, the service you're provided, either by the existing or the new ones, will be better.
Sure.
So,
sure. It's only improving.
Stay patient, and service from everyone will just improve.
Hey man, 2016, 17, you couldn't even find a stop loss order. So we're definitely moving in the right direction, at least.
At least you're ahead of me. I wouldn't have known how to buy a Bitcoin in 2016.
Oh, good point. Good point. But I can just say, for me, coming over from trading stocks and some Forex, it was definitely a bit of a shock as to how infantile the platforms were at that time, and they've improved dramatically since. So this person asks, when you go to dinner with an institutional customer, how much of the conversation is about crypto? That, of course, is if you can go to dinner. I don't know where and what people can do, but
genuinely, it's helped my whole business in the last 3 years because we've got customers in 100 countries and 11 offices or whatever, but ultimately, I'm selling two numbers on the screen in foreign exchange, albeit across 80 currency pairs. Spot FX just isn't that exciting. It's huge in terms of volumes, right? Huge. But as a door opener, as a start to the meeting, right, or the dinner, or the beer, hey, I saw you guys did some good numbers in Bitcoin this week, or in LMAX Digital this week. So it's a great icebreaker. They're certainly intrigued. And remember, in the institutional space, you have to have tenacity. You've got to have persistence. And you've got to have some energy because it just takes a while for them to get on board. It takes a while for them to allocate more of their portfolio. So I think it's been, it probably takes up a lot more of the meeting than it does in terms of their net income to me. Right.
Oh, sure. you're like you're their Google. They ask you their basic questions that they don't understand and expect you. I know how that is. Obviously, this question actually, this one's a bit over my head, but maybe you can parse it. Can crypto replace letter of credit and banking interference in global trade finance? If so, what will be the model to manage books of accounts, goods in hand versus crypto holdings as on trade end date?
Wow.
Yeah. As I said, that one was a bit over my head. We can always pass on questions as well if it's not the purview.
Yeah, look, I haven't got the perfect answer for that. I think it's all down to smart contracts. I think it's possible. It's certainly inefficient, the capital market system at the moment, in terms of placing collateral, if you like, managing your credit risk. So I think it's possible. I like the theory of the DeFi world, certainly, right? And being able to basically transfer ownership of the asset. But what I would say is, and you know this with even something as basic as Bitcoin, instantaneous settlement isn't quite there. So you're still waiting and you still have this settlement risk. So the answer to the author of the question is, I'm sure you can look me up and educate me, A. But B, I think there's the opportunity there, but there's no way that's available today, and it doesn't eliminate the current plumbing.
Right, and that's something that will be available soon. What is the averting hold time these institutions are looking at for Bitcoin? 10 years, 5 years, or a lot longer?
Longer. Everyone I know is longer, for sure. I mean, I think we're really at the start. I mean, look, I may not be a crypto evangelist, but I'm a raging bull, right, on the market, because I look at it and say, well, there's $110 trillion of assets under management today. That's just a fact. The total market cap of Bitcoin is around $1 trillion. If just 5% of those assets under management, and what does that mean? The pension funds, right, the asset managers, the corporates, if they just allocated 5%, then, put simply, the value of Bitcoin would have to be 5x. So I think everyone's looking at it that way. The buy and holders are saying, we don't know where it trades next week, next month. You don't, I don't, Scott. We could easily see a 30 handle, as easy as you could see a 60 handle.
Sure.
And who knows, maybe even if something else happened, another pandemic, you could see, back in the teens or a 20. But everyone knows that it is the future. And there's not one board, there's not one treasury committee, there's not one risk committee that isn't discussing diversifying into that asset class today. So their holding time is long, but it's small percentage points. Not everyone's Michael, not everyone's even Tesla. I mean, from an LMAX perspective, I say we're very long because of what we do for a living. But in terms of our own funds, we typically, our target is between 5 and 6% any given day, any given month. So we rebalance.
It's quite a bit.
Yeah, and that's for 5 years. Yeah,
that's quite a bit. I mean, that's incredible here. And whenever you get asked this question, to me, it always sort of ends up being a chicken and the egg sort of scenario, because you talk about obviously pensions and these huge institutions coming in, and if they did that, then the market cap would be such and such. But on the flip side, the market cap also has to get to a certain point before they can enter, because for it to be big enough and liquid enough.
That's it. But it's not quite so chicken egg. The price will just ramp. I mean, let's just be extreme. It should be extreme. Imagine someone's just there on the bid all day tomorrow buying $1 trillion. They'll buy $1 trillion, and Bitcoin's going to trade at 120,000. That's just the way markets work. So it will get there, but the flood, I mean, we all get carried away a little bit. It's almost like the price goes up 10x for the weight of money coming in. I personally don't believe the tripling in Bitcoin market cap over the last 6 months is fully supported by institutional money. So
it can't be.
Market cap 300 billion, it's now $1 trillion. I don't think 700 billion of institutional money is coming. So it's a bit frothy. but it is coming. So that trickle will increase and may become a flood.
And that is great. Next question as a follow-up is, who's going to play the bigger part of adoption from this point forward? Will it be institutional investors or will it be retail?
Yeah, well, I think it's going to be both. But I mean, let's look again at other asset classes. I mean, again, I'll go back to what I know best. 20% of the FX market is retail. What is it today? Must be 90-10 in crypto, retail versus institutional. So just the weight of institutional money is much, much bigger. But remember, a lot of that institutional money is actually ours, right? It is your pension funds, right? It's your wealth managers. So a lot of it ultimately is ours, right? That's why, the stock market's kept booming, just because we keep paying into pensions. That's it. So I think the real growth, the growth we haven't seen yet. I actually don't think you've seen parabolic phase yet.
I think we're at the tip of the iceberg.
Yeah, that's it.
We're talking about, at this point, we're talking about 5 companies when we talk about institutional adoption. We're not talking about 500.
100%. And actually, the phrase you just used, I won't give them too much press, but one of the banks came out in a press release today and said it's the tip of the iceberg. I just think, when you can call any one of your household name banks and say, I'd like to invest 100,000, or I want to rebalance my portfolio and put $5 into it. I think when that happens, and that's happening every day, I think it will go parabolic. I can't time it, but I think it's inevitable.
Why try? Unless you're trading with leverage, it's my opinion at this point. I went from being like sort of an aggressive trader through the last few years to being as much of a buy every dip and hold forever kind of mentality. And I think that for now, that is definitely the way to approach it for me. Who are the big players in Bitcoin futures is the next question.
I'm not going to name them, but look, sorry that's a bit boring for everyone. You understand?
No, but I expected that.
Your major, what I would say is all the NFA regulated guys you'd expect to be trading in Chicago, trading gold futures, commodity futures, they are the main names also in crypto. And then there's a few, they're well publicized, there's a few crypto-only houses that made big names. One I know was acquired in the last quarter of last year. They're big in crypto, but typically they've all started from, it's a group of guys or a band of brothers or a desk that started off trading fixed income or equities or commodity futures. And they decided they want to get involved in crypto, and they've gone out and set up on their own. Or they've been spun out of a bigger group. So it's all the big names you'd expect are top of the list, and some interesting newcomers. And I think that's the good news about it is it's pretty democratic. It's pretty democratized, this market. So I think if you've got smart algos, if you've got a risk appetite, if you understand markets, you've proven it, Scott, you can trade this product.
Yeah, sure. This is a question that I get all the time. I'd love to hear your answer. Do you think we will see such harsh corrections moving forward once more and more institutions get involved, or do you think their incremental onboarding will lead to more steady growth?
Yeah, I think you're going to see. I think you're going to see pullbacks, just like you've seen. Let's face it, the S&P isn't immune to it. You saw that in the pandemic last year. So yeah, I don't think it'd be as dramatic and skittish. One of the things that's frustrating and even scary from an exchange provider standpoint is that when there's a lot of liquidations out there in a retail leveraged exchange or something, it's a real snowball effect. So you see these huge gaps, the 5%, the 10%, right? It's because there's no depth there. There's no depth of liquidity. I need to help improve that. The rest of the institutional market needs to improve that. So maybe we can take out the tails, right? So maybe if it's going to drop 5%, rather than it should drop 5%, they're dropping 10 and 12. Maybe we can hold at 5, 6. So but I think you're going to have pullbacks,
Yeah.
500,000 isn't going to be smooth. It's not going to be suddenly transition.
No market ever is.
Institutions will help because, the moment when you saw the free fall, when you saw it in March, where was the bid? where was the weight of money on the bid? Right, a few of us saying buy the dip wasn't enough. You need that
Miners.
money, that wall of money saying we like it here, we're bid because we see it trading at 30,000 or 50,000 6 months from now.
It's much easier to see where that is also based on where the publicly trading big players are in, right? I mean, you just know that they're not going to let it fall too far. And of course, the miners floor, as you touched on before, which makes a lot of sense. I don't know if this is one you want to address, but what are your thoughts about XRP? There are two groups of people. Some love it, others totally hate it. When we look at Ripple and their partners who use ODL, we see that, well, this question continues. Sorry, Ripple has partners, and those partners are mainly big financial institutions. What do you think about the success of XRP in the future?
Yeah, I've got a question mark on it. Again, it's one of those ones, I like the theory. I like the theory of it. It's big enough. It's one of the 5 we listed on day 1. But yeah, I think the ownership of it, the partnership of it. I mean, I'll be clear. I've had a few conversations with them. For me, they need exchange partners to make it work. So we'll see where it goes. But the great thing about it, what I would say on the positive side is, I'm not an evangelist for anyone in particular. These are all scientific experiments. It's a fantastic time to be alive. It's a fantastic time to be in capital markets, right? These are still pretty new, right? Computer science experiments. So they're not all perfect. None of them are perfect, but they're all different. And I think the next generation of them will be better than this generation of them. Right, and we talk about DeFi. That's just getting started. So, I think let them all breathe, let them all try their own way. And so I'm neither a buyer or seller of that instrument right now or that.
That makes sense. I love this question. When a small-time investor like myself tries to read the tea leaves of institutional investing, how good should I feel on a scale of 1 to 10? Well, you said you're a raging bull, so I think that gives us some information.
Yeah, I mean, I have to say, that's a personal viewpoint.
Me too.
Can't get too attached. As a private investor in any small town, look, it's the same advice you always give. We don't give financial advice, but don't invest, don't trade more than you can afford to lose, because we don't know what's around the corner. Don't over leverage. But I think, in the crypto, in terms of everything I've invested in and got wrong over the years, if I can lock up X% of my portfolio, put it in a drawer for 10 years, I'd be happier with this one than anything else. As happy as I was, I remember I queued outside the Apple store. Where was it? It was Scottsdale, Arizona, when they were launching the iPad. Queued up. Imagine me queuing up to buy a couple of. I was happy. When I got in and I saw all these people and I realized I wasn't first in line, I was about 80th in line. I thought, wow, I sleep well at night owning this stock. I sleep well at night owning Bitcoin, but you just got to take the bumps in the road when they come.
I love that. I love that answer. This guy wants to know if you have an office in Berlin and if you're hiring.
An office in Berlin?
Yeah, and if you're hiring.
We're always hiring. You can find me pretty easily. Anybody particularly in engineering background or computer science background. The pandemic has taught us that the world is now our recruitment center. So wherever you are in the world, I've got developers working for me down in Auckland, even though our hub is here in London. So yeah, reach out.
Love it. On a personal level, what's the most exciting, rewarding part about running LMAX?
We love the markets. So I love the markets. I've been in them, I guess, man and boy, for a decade learning my trade on banking, trading floors, and then I guess a decade trying to learn how to run a business and be an entrepreneur. The reward is seeing people grow, right? Actually seeing, and what I love nowadays, I mean, I'm now the old guy, right? I used to think I was good at things like Excel. Now everyone's coming out of college, coming out of school, they're all writing things in Python and Java, and the way the younger section of society and LMAX are adapting to blockchain technology to crypto, it's almost seamless. So for me, that's the real reward. And look, I'm in capital markets. I must be honest. I like to see good volumes. Right? Our best days when we have big volume days, right? It's proof of your concept. It's proof that the tech you've built works. I'll tell you, the hardest day is when you've spent 3 months building out a new product, you list it on day one, and you do $200,000 in notional.
Yeah, nobody cares.
Go home and keep that conviction. So seeing it trade, seeing it print, that's probably the biggest reward behind seeing my people develop.
Hey, that was the experience for the CME and CBOE with Bitcoin futures initially, right? I mean, they were doing nominal volume, almost insignificant, and those products have built, which is actually something that you mentioned before when someone asked, and you said, don't be over leveraged. And we talked about sort of the size of corrections moving forward. Isn't leverage largely responsible for that being a 12% correction instead of a 5% correction to some degree, because you just get this cascade of liquidations on retail exchanges? I mean, when you have people that are 100x on an asset that moves, implied volatility is 1% every 5 minutes, right? So I mean,
you know it better than I do. I mean, you see it before me if you like, right? Because you just wow, what's happened here? But I'm looking in the market and look at some news. Again, traditional capital markets, you're looking for an interest rate announcement or a default or a stimulus package or whatever it is. That's what I'm looking for. You look around the news wires, you're seeing nothing, and it's just liquidations because someone's precipitated by selling $50. So the leverage is exacerbating that. But I say again, with a deeper institutional market, it won't go as far.
Right. Yeah. It just provides a floor.
But over leverage, I mean, look, if you trade 100 to 1 on a product that is moving 10% a day, I mean, you need to have a look in the mirror, right? I don't mind, by the way, if you say I fancy it, but it's no different than going and betting on black or red. If you're trading 100 to 1, when this asset class trades 5 to 10% as a normal daily range.
Yeah, but you don't get free drinks when you get liquidated on exchange. You get those at the roulette table.
might get some tasty snacks.
Yeah, you should get something out of it. So, actually, let me go to this one. I don't know if this is on your radar, but what's your outlook on NFTs? Is that something that you pay attention to, non-fungible tokens and the art market in crypto, or is that sort of not on your radar?
I know about this much about it. I've actually got a guy coming in to explain it to me tomorrow. I mean, all I know, at a very high level, the world in the future could be trade everything against everything. So this is part of that. But I could probably write in the back of a postage stamp how much I know about NFTs today.
Yeah. If you know about art, you know about NFTs. But I'm wondering what range percent of alts will be brought along with whatever dominant coin becomes an institutional cornerstone in the future. What percent are doomed? This goes to the great culling, the internet boom of the late 90s question that we always get. How many of these companies are going to be pets.com and how many are going to be Amazon?
Who knows, right? I think, look, the big names you've discussed today, the early entrants, Krios, they were prescient. They took the leap when no one else was leaping. I hope we were the same in the institutional in that. We took a leap 3 years ago, and maybe we're coming to some. We're reaping the rewards now. Yeah, look, I think it's okay, but it's okay. It's the same as .com. It's okay if some people fail, and maybe they're going to fail in the first one, but they'll succeed in the second, third, or fourth. My favorite quote. Michael Jordan, I'm not afraid of failing. I'm afraid of not trying. So, yeah, a large percentage will fail. I'm not going to give you a number. I look at the altcoins. It's funny.
I think more than 9 out of 10.
Exactly. I don't know what they are, half of them. So
nobody does.
We'll go to the wall. But again, if they're adding something, I'm not a big fan of these tokens, which are just people monetizing their name, right? The get rich quick type token and coin. Not a big fan, but a lot of the utility tokens, for example, they're trying to fix something, right? They're trying to solve something. And I think that's fantastic for society. And it's a fantastic scientific experiment, learning experiment for all of us. And we'll all benefit. We'll benefit likewise from a lot of the failures. I mean, at LMAX, we learn a lot. We learn more. You learn more from when you fail than when you succeed.
Yeah, and you're not going to have innovation without failure. I mean, when you have 1,000 people trying to solve a similar problem, if 900 of them fail, fine, right? Like you said, the benefit still, the winner, the best one emerges, and there's still a great benefit to society. But I mean, if you asked me that question, I would say 9.5 out of 10 will be non-existent in 5 to 10 years. You don't have to say it because I'll say it. I don't see how they could all possibly survive. Maybe they'll be like traded on the secondary markets, the coins themselves, but the companies, I can't imagine that many of them surviving. So I know we're getting up against it with time here. I'll ask a couple more and then we'll go. How can we bring the sense of urgency regarding blockchain to multinational companies, which I think we are seeing already?
Yeah. It's there. You're not going to get urgency from these companies, right? Because look at it from their perspective. It ain't broke, don't fix it, but they know it can get better. So what they can't do is take undue risk just to transition to blockchain. But they're all looking at it. Whether you think they're making the wrong decision or not, I mean, there's some massive multinationals that have got their own private blockchains. I personally think they should stick with the public ones. But again, we're going to learn, right? Maybe the public blockchains actually need to have a sense of urgency, right? They need to fork quicker and succeed quicker. But I really do think it's there. I mean, every walk of life, every multinational is looking at it, developing it now. I mean, look, just take an analogy, right? Just look at the electric car market. 10 years ago, if someone told you that they would only be making electric cars in 5 years' time, you would have said they were crazy. But that's the truth. The biggest car manufacturers, that's their prediction. 5 years from now, they're only producing electric cars. So I think it's happening. It's not going to be as quick as we want. But the good news, like they always say in technology, it's not going to move as far as you want in 2 years, but it's going to move further than you think in 20. Right? And 20 years ago, I was still sending faxes, put it that way. So that's how far we've come. And writing deal tickets, that's no joke. Writing deal tickets, right? And clipping them together and delivering one to one department and one to another department. So we're going to move very fast in 20 years, but maybe not so quick in 2.
When I graduated college 20 years ago, I got one of those blue iMacs and it had a 14.4 modem and everyone thought I had the fastest internet in the world. So, and that was, just over 22, 23 years ago. It really is unbelievable. So did I read that you guys are 8% of the spot market in crypto? Did you account for it?
Allegedly, we don't like to brag, but yeah, I think we've been up 8 to 10% of what
That's huge.
Now, we're not looking, to be fair, I mean, there's stuff out there traded against tethers and all those other coins, but in the real, what people regard as the real spot market, yeah, we're certainly the number 2 Bitcoin exchange overall, retail and institutional. And yeah, we're probably 8 to 10% of the market overall. And, we need to grow that. And I don't mind if the percentage doesn't go up as long as volumes go up and the whole ecosystem is better. And then let's all compete and we'll, if I'm 8% in 5 years' time, Scott, I'd be happier because the market's going to be
right. Because the market will be 10 times bigger, if not big. Yeah, even more. Right. Of course, that makes total sense. So I'm curious, what can we look for from you guys through the rest of 2021 as this continues to scale? What are your plans?
Oh, well, look, we're beta testing futures as we speak. That's a hard market to break into, but 7-day-a-week futures. So hopefully something we can add to the ecosystem. So rather than just me too. So I think that's interesting. We need to extend our distribution. That's a boring answer. The other thing you should really see is, I'm looking forward to a handful of banks, and I'm going to say it will happen, but I'd expect a big announcement from a bank who'll be trading actively on a platform by the end of the year. So for me, that's going to be the most exciting thing. And look, it's the nature of our job. I've just got to keep building liquidity. I've just got to keep adding to the ecosystem, and hopefully it will benefit everyone who's trading today, whether they trade with me or whether they trade with retail platforms.
And I would love to see 7-day-a-week futures, because there's nothing more frustrating among technical analysts than the CME gaps. when Bitcoin trades throughout the weekend, and then the CME isn't,
And that's my point. I mean, watch this space. I'll let you know. We're trying hard. It's not perfect because obviously no one else is really doing it, but we're trying hard, and I think that could be something exciting for the market. But it'll take. Typically, when I launch anything on an institutional exchange, it can take anything from 3 months to 3 years to know whether it's worked.
Right. That makes total sense. So, any other parting words before I know we have to go? We've taken a lot of your time here.
No, thank you very much. I've enjoyed it. Don't forget us, all you guys stateside. There's a lot of just because I'm in London doesn't mean that we're not servicing the global market. So think of us. If you're looking at price discovery, or you want to check out what's happening in the market, check out LMAX Digital. But and I wish everyone luck. It's going to be an exciting year, and for all of us in the space,
it is.
And we're holding crypto assets today, so well done for holding it. And let's see what the rest of the year has in store for all of us.
Awesome. Well, thank you so much, everybody. All the information you need about LMAX and about David is in the description under the video. So you should go follow him on Twitter and keep up almost 10% of the spot market. It's insane when you think about the numbers of volume that you guys are doing. I think people just don't realize it because it's so institutionally based. But you guys are accounting for a massive, massive swath of this market. So thank you once again for taking the time to do this, and we'll have to do it again down the road. Keep up maybe in a few months and see if this market has 5 or 10x in market cap by then.
Sounds good. Thank you very much, Scott. Enjoyed it.
Thank you so much.